Gold Corp. It trades on the OTCQB under the symbol SRGZ. It's a leading mining company based in Nevada, dedicated to the exploration and development of high quality mineral properties and aims to deliver long term value to its shareholders and stakeholders by building high grade resources in Nevada. Happy to welcome Chairman and CEO Lindsay Gorrill. Welcome to the conference today, Lindsay.
Anna, thank you very much. Looking forward to it.
All right, the floor is yours. Call me back when you're ready for questions.
All right, thank you. So I want to welcome you all to Stargold's first ever presentation. What you find out is we are much different than any other junior mining companies because management and insiders are the largest shareholders, and we continue to invest in the project to put the mine into production. So kind of why invest in Stargold? So my background, I actually bought my first gold garnet mine when I was 29 years old. I have now built and sold 4 mines in my life, one in the United States, 2 in India, 1 in Canada. And for each one of those, I was one of the largest investors. And when I look at mining property, I look to invest, I look at 4 important items. If they're not there, you should not invest, right? The first thing is it permittable? So if any type of mineral property anywhere in the world is in a place that is very difficult to permit, or there's issues there or conflicts, then I would just step away. And you'll see under our Large Street property, it's permittable. We've done most of the environmental studies already. Number 2, is it producible? So have they proven that they can actually produce whatever ore, gold, et cetera, in a economical manner? If they can, then you got that box to tick. Third thing, is it economical? Have we proven that you can get the production quickly and you have at least enough ore initially to get the production? Because I'm a believer on moving a mine to production as soon as possible, creating cash flow, expanding there. I don't believe in drilling for 20 years and spending money that way. I think it's important to get to mining, and if it's economical, you do that, and we are. The fourth thing is basically expandable. Is it expandable? Are there other opportunities? The answer is yes in this case, but again, the key here is get the mine to production. I'll then talk a little bit about the corporate structure, look at the geological overview, I'll then talk about the economics, our clear go-forward plan, the financial costs, and if we have time, we'll discuss the future exploration and growth. Can you guys see my slides? Everybody sees the slides.
We can see them.
Okay, good. Okay, good. So then let's take a look at your investment highlights that we have. So economically viable. So we have a highly leveraged to gold price and reserve expansion, obviously, and we also have, you'll see, we have a gold and silver recovery, which is low CapEx and OpEx. Second, advanced gold project permittable. You'll see that this project, we've already done all the studies required to get the final permit, and we have a short pathway to production. Third, are we in a jurisdiction that's friendly? We're in Nevada. That's one of the reasons why we picked this property in Nevada. And so we believe that this is one of the best jurisdictions to be in. Again, we talked about resource expansion potential. There is future upsides. There's 7 identifiable other targets that have shallow gold targets all over our property, and we'll talk a little bit about that. So let's talk about the management. So all directors and management are investors. So there's myself, Lindsay Gorrill. Again, I've built 4 mines, sold them. This is my 5th. David Segalov is a mining engineer, long-term friend, has lots of background in investing in mining projects, and is also a very large shareholder. Tom Power is really the reason why we say ground to vault. If you see our talk, we talk about ground to vault. The reason we say that is Tom Power owns his own minting company called Sunshine Minting. It's based in Las Vegas. And he produces coins and bullions for the US Mint, the Canadian Mint, the Australian Mint, and the South African Mint. So if anyone listening has ever bought a gold coin or a silver coin from a group online, it is possible, highly possible, that Tom's company produced that coin. So what we want to do is we want to go into production. We want to produce the gold, but we want to get to at least some of our gold into our own final product, which I think is really exciting, as we're the only company that will do that. And I think it's exciting for investors that not only do you have a gold ore, maybe a gold bullion that comes out of there that we sell as it comes out of the property, but we want to make our own gold coins. The fourth director is Paul Coombs. Paul Coombs has a strong financial background. He's been in the mining sector for over 20 years, mainly in gold. And he was my partner when I built my last mining company in Canada and sold it 10 years ago. So strong directors management. Kelly Stouffer, our CFO, been with the company for 8 years. We have filed audited statements every single year. We're clean. So we have the ability to, if things move forward, we can go from the OTCQB and up to a new, better board. So we have that ability already. We just want to make sure we're ready for any type of growth potential as things come along. So let's talk about the geology of the property, et cetera. Are the slides big enough to see for my things or not? So they're big enough to see, everybody? Yeah?
Yes,
okay.
they're bigger than your face.
Okay, good. They're smaller on my screen. Okay, cool. All right. So let's talk about the Long Street property. Now, if you look where it is, if you can see my cursor, if you look where it is, it's between Reno and Las Vegas, near a place called Tonopah. Right across the little hills from us is a mine called Round Mountain from Kinross. So we see Long Street project closely resembles the Round Mountain gold deposit, located 29 miles away, which has produced over 16 ounces of gold. The identical geology consists of brittle turfous units that have been fractured and altered. So you got low-grade gold present as dissemination within veins. So if you look at these rocks here, every one of these rocks have tiny little veinlets of gold in them. And then you have high-grade gold is present also as free gold and fractures within quartz veinlets. The Long Street project shows many similarities to Round Mountain. Both systems are hosted in large, rye-like ash flow fault tuffs. Both systems have formed along fractures after the collapse of a large caldera complex. Both systems are low sulfides and consist dominantly of sheeted and stalked work veins. Both areas show a dominant northwest trending, northeast dipping structural direction with a secondary northeast trending set. In layman's terms, this deposit has oxidized ore that is very fine gold veins running through these sheets all over the property. It is a very hard property to drill based on this geology. That's why you don't see if any of these come up. But if you find enough gold in these types of structure like we did at Star Gold, it is very lucrative and a very low cost mine to produce. So this is what we've done. We have basically looked at a property. We have a large land mass, 2,500 acres. We focused on Maine alone. We said, okay, we have all these other targets. Instead of being like a normal junior company and spending monies on drilling and drilling and drilling and going nowhere, except spending money, we said, let's focus on the top of Maine that has this type of geology, which the whole property does, and let's see if we can find enough ore to put into production to have a producible mine and start to make some money. And that's what we did. We focused on that. So this, if you take a look at it, we do have a 43-101 on it. We have a preliminary economic assessment on that. We'll talk about that later. We've done all that. It's basically 1.6 miles from the inside from the road. So if you kind of look at the map on the right, we own the big area out there in the valley. So you come off the main road here, it's 1.6 miles into Maine. So it's very easy to get to. So again, think about our thought process. We're the investors. We have put a ton of money in this project. And the reason we did that is because we believe, based on all the criteria we go through before we invest, that we can put this in production. So we said, okay, let's focus on Maine and let's do what? We have 26,000 drill meters in Maine. We have 403 reverse circulation, and we have 19 diamond drill holes. So again, let's go back to how this thing is formed. This is massive sheets of fine gold grains. All you have to do is basically pick it up from mine of ore. So basically, we're not doing a lot of crushing. You just basically pick it up, put it on the leach pad, put acid on it, and you have gold. And I'll talk about that in the next slide. So this is outside of panning for gold and things like that. This is by far the most inexpensive way to produce gold and easiest way to produce gold. because basically the acid just leaches the gold out. So then if you kind of look at the actual hill itself, we have about 100,000 ounces in our 43101. Now remember, when you look at how these geological third-party studies are done, you have to have so many drill holes tied to the ore body. With this being these fine gold facing veins, it's hard to get enough holes together under the 431 regulations to say this has enough gold to be a mine. So you'll see as you look at this picture, we have a lot of gold indicated in these drill holes below the pit, the starter pit we call it. That is not in our resource because we don't have enough holes together. But what we do have is we have enough gold at the top of this hill that we can just pick it up and throw it on the leach pad and make some money. So then I talked earlier about this. Is it producible? So what we did was we did a lot of tests on the leachability of the mine and the ore. So what we found out was that a 19 millimeter feed size, which is basically run of mine, basically on maybe a small crush here or there, in 20 days we get 80% of the gold out. So in 20 days, put it on the leach pad, we have 80% of the gold out. So we did a lot. I went to Round Mountain a lot. Look at what they did. They do similar thing. They do what they call the super leach, which is put run of mine on a leach pad like this, get out most of your gold, get out, say, 13, 14% of your silver. Then in the future, you pick this back up, you recrush it, put it on another leach pad down the road, get the rest of the gold out, and maybe get a lot more silver out. During our plan of operations, which I'll talk about that in a second, we are working through the crushing test to see if that is viable or not. But basically, the entire economic model on this ore body is based on this type of mining. Run a mine on the leach pad, 80%, 20 days, and that's basically what our economic model was based on. So next one, what does the mining plan look like? So we've already developed our mining plan. So we know exactly what we're going to mine, how we're going to mine it, where the leach pad's going to be. So if you can see the green here is basically there. So if you look at Maine, the yellow dot, what we're looking at there, that Maine, which I'll give you another picture of it. This one here kind of looks like that. So this is what you're looking at. This Maine, the target, here's the hill with all the rows and the drill hills on it. That is what, when you look at the green here, that's what you're looking at. So what we're doing is we're taking the top of the knob off because there's gold everywhere, and we're bringing it down the road a couple hundred meters, put it on the leach pad, and out of the leach pad you basically will produce our product out of the leach pad. So it's a simple mining method, very cheap. Get it to the leach pad, get it produced, get it graphied, and then ship it to make finished product. Long shoot development. So I hope that's enough information on it. I'm not going into the geology forever, but I think that gives you a good idea of what we're talking about. So think about it. Gold in these fine veins everywhere, hard to drill, hard to find. We found one, easy to produce, inexpensive to produce, and quick return. That is why we made the decision. Now we're going forward with production. So let's take a look at the Longstreet development. So under Longstreet development plan, you basically have an open heap leach project, all right, based on historically productive mining areas in Nevada. This is a simple, straightforward mining process. It's basically open pit, blast, and crush those bigger than most of the run of mine. And we are very close to the heap leach pad. We're majority of the way through the permitting process, and we have a relatively short time frame to mine permitting. We'll talk about that. We did it in 2021. We did a preliminary economic assessment. We did it in 2020. We thought we were going to move forward then gold kind of went down a little bit, so we kind of put it on the back burners. But it did give a good economic case over 3 years at $1,700 gold and $1,900 silver. It gave a IRR of 89%, generated $52.7 million in cash over 3 years, and could produce an additional $50 million in net revenue in additional years based on what we see. So again, highly leveraged gold price and resource expansion. So what we did was we're working on updating all our numbers today. We're getting quotes from everybody. But what we did was we took the 2021 pre-fees. And remember, we took this as an estimate, so don't say it's not guaranteed. We took our 2021 preliminary economic assessment, which is on our website. You guys can look at it. We then increased our op costs by 20%. We increased our capital costs by 35%. We used $2,700 an ounce gold, and we used 20-ounce silver. Payback year and a half, pre-tax NPV over 100 million, and IRR over 100%. So what this says is it was doable at $1,700 ounce gold, but at $2,700 ounce gold, this is massively lucrative. So that's why we are full speed ahead to put this project in production. Obviously, as I said before, we'll talk about it a little bit later. We have further upside in large land package with 7 identified shallow gold targets in place. We'll talk about that a little bit. That can easily increase our mine life. And again, focus on high level net cash flow and do outsized dividends. So the idea for us is that we are the shareholder. We're the largest shareholders. We invested a lot of money. Our goal, get the cash as soon as we can, use some of the cash to expand, but use some of the cash to either pay dividends or produce our own gold coin that would become basically some sort of a dividend or something like that. So that's kind of the Long Street development idea. So let's look at the permitting. In my slide earlier, I talked about permit. So how do we make sure we know we can produce a mine? There is no reason whatsoever, and I've been involved looking at a lot of investments in my life since I bought my first mine when I was 29, in looking at properties that had good potential, but were basically impossible to permit. So if you can't permit it, what's the point? So you can see, if you look at our permitting dates, we started doing our permits fairly early. We did our wildlife and biological studies, which is the most important one. Two of the most important ones are wildlife biological studies, cultural archaeological studies. We did the first ones both in 2016. So think about 9 years ago. We picked up the property about 10 years ago. We said, look, there's no use spending a ton of money. We think there's an ore body there. We did some drilling, but let's take a look at what's there. The wildlife and biological studies, we've done 16, 18, 19. That total pack of studies shows there's nothing there that would stop us from getting a permit. That's critical. Then we had to do what's called the winter bat study. Again, 2017, 2020 has to be done over a period of time. Nothing there that would stop the permit. Cultural and archaeological studies. Again, nothing came out that says that we have anything on the property that would cause an issue. The next thing we looked at was, okay, Nevada, if we're going to get a mine produced in Nevada, we need to have water rights. To have water rights, it's difficult to get water rights from the state. So down at the bottom here, we have negotiated and are acquiring our own private water rights. So that means that we have the right to the water that we own to be used in our mine. That's a massive issue. So a lot of companies talk about different things, but they miss some of the critical things you need to put a mine in production. So again, going back to my first thing I said, permitting is the number one thing you got to look at. If you can't get this thing into production based on a permit, why put any money into it? So when we look at our plan of operations sort of going forward, we're doing basically two things. We have a hydrology study, which means that we have to drill some holes, and I'll talk about that in a second. And we have some geochemistry study to be done, and we'll talk about that. That's part of our plan of operations. So basically, we're going to submit our plan of operations next week. And that plan of operations will then trigger, if you can see my cursor here in step 2, will trigger a request for permission to proceed to formal EIS. So basically, file the plan of operations and trigger the EIS. We expect it to take 5 months to complete the EIS. Now, again, the Trump administration has come up on April 18th with something called the Fast 41. So it is possible that we can, because we have all our studies done, all our environmental studies done, we have our plan of operations finished, it is possible this thing speeds up quite a bit under the Fast 41, but we don't know what that is yet. We're still working with the government, we're still trying to understand that. So again, we have a timeline under 24 months, but maybe it's faster than that under Fast 41. We hope it is, but we just don't know yet. And then obviously step 3 is issuing the permit. So get the permit submitted, get it in, get it pushed, get it. So basically what I think could happen is that we could, once we get our EIS submitted, we could push for the Fast 41 that would push the government to issue the permit quickly. So let's say that happens. I'm not saying it will happen, but if we get the EIS submitted in 5 months, maybe we're mining next year. Again, I'm not saying that will happen, but I think the Fast 41 gives us that possibility. Plan of operation, like I said, we're submitting it next week. We actually had it submitted in March of 23. We didn't do any work just because of what was going on with the market and gold, but all we have to do is, it was already approved by the government. So this is simple. We're updating everything, updating some dates on it, updating some information, submitted next week. We think it's approved ASAP. And it really only deals with 4 things. It deals with water well drilling. So again, we got to drill some water wells to make sure that we have enough water, which our studies show we do. Number 2, we have to drill some water monitoring wells to show where our monitoring water wells will be, to keep track of obviously the heat sleep operations, et cetera, and any type of seepage. The third thing is geotechnical drilling. We want to make sure where we think we're going to put as we said earlier, put the leach pad, there's not a bunch of gold underneath that. So we do have to do geotechnical drilling. That'll be done also right away. And then we might do some diamond core drilling. We may do some. We're thinking about putting a couple of deep holes in Maine just to see if we get some mineralization way below the pit that'll show that this thing maybe runs as someone like a Round Mountain will run. Oh, sorry. I forgot to move the slides. Sorry about that. This was the permitting time frame. Do you guys, I talked about that. I'm working off a bigger one on my screen. I apologize. So again, as I said, we've done all the baseline studies on all the studies. We have 2 more things to do: hydrology, and geochemistry. That's it. We're filing our plan of operations, ready to file our EIS. And then, as I said, the plan of operations is just basically 4 things, pretty simple. File the plan of operation, prove we have the water, prove we're going to have our monitoring wells, and make sure we're not putting a leach pad on top of gold. All right, so go forward plan. So on a go forward plan, again, approve the PO work. So again, that's a plan of operations has already been approved. We're just resubmitting it, so easy. Geotechnical testing on the proposed heat leach pad to make sure there's not a bunch of gold below that. We're doing a geochemical testing for our ARD to make sure what kind of stuff's coming off our waste or ore, leaching off that. Our water monitoring wells. We're going to do some further metallurgical tests. Based on making sure that maybe we get more silver out. But again, we're still going forward with what our plan is now. Maybe do some more expansion drilling. We have a whole bunch of drill holes in the plan of operations. Maybe look at how deep it goes. Look at that so we talk about the future. And then basically we're going to go forward and update our plan of our preliminary environmental assessment based on current numbers. We're going through that right now. We hope to have a new PEA out maybe by the middle of July. And then again, in a few months, we're going to submit the EIS mine permit and hope the Fast 41 that Trump administration has passed will help us push that through. Quickly, financial overview to support the go forward plan. We believe that maximum $4.2 million gets us from today to final permit, which allows us to mine. And again, the most important thing is to get the permit. If we get the permit, then that adds massive value. Well, first off, we will get the permit. That adds massive value to the company, etc. And that's sort of where we are there. I think I've got a couple more minutes left, but again, this is looking at Long Street, looking at where the leach pad is. You can see it's pretty simple. All the other main ore bodies, except for Cypress Ridge, all these ore bodies show surface gold, very similar geology as main zones. We think that's all part of this massive class caldera. There's gold on surface everywhere. So we think there's lots of opportunities for expansion. Again, I said earlier, I don't believe in drilling for expansion until you go into production. So our goal is get main zone into production, create a lot of cash, make us a lot of money, either dividend out and invest some more in expanding over here. And the Cypress Ridge, we believe, is a completely different system. The Cypress Ridge has a large, huge quartz vein gold geology. So it's a different system, but also looks pretty good. But again, our focus is Maine. Think about Star Gold as basically a company who can get a gold mine into production very quickly and can make a lot of money to basically add value to the company and hopefully expand down the road. And Anna, do you want me to open up to questions?
Yes, absolutely. Let's jump in.
I forgot to show the slides. Sorry. I didn't show the slides while I was talking again. I apologize, you guys. This is my first one. So anyways.
It's okay. All good. Good job. Let's see. Jumping in with, talk a little bit about the important strip ratio to mining costs.
I think, yeah, if you look at strip ratio, so strip ratio means basically how much dirt versus ore, right? And if you look at the main street, you're under 1-to-1. So that means that every shovel of dirt, less than one shovel of dirt has more than a shovel of ore. And this was based on a PE at $1,500. So what you're going to find out when you look at the actual ore body, we had basically 50% waste, 50% ore, but with gold being 2,700, 3,000, a lot of that waste back then becomes ore. So what you're going to probably find out is 3/4 of our dirt that we're picking up is going to the leach pad, which means that low cost.
And so how much of the CapEx can be variable versus fixed? And does this change the project?
I think when you look at the preliminary economic assessment, of course, the third party financial engineers and that kind of stuff have to look at us as if we're putting all the money into the CapEx of the company. Again, we're bringing that up, meaning mining equipment, et cetera. But we've gone out to 2 mining companies that do contract mining. So I would say when we're updating all our numbers, we're going to show basically a PEA, preliminary economic assessment, that shows us doing all the capital, one doing contract, and the contract will reduce our capital by almost 50%. So it's a huge variable. So we believe that we'll be contract mining.
And how have you funded the project over the last 6 or 7 years so far?
So again, we didn't go to the market for money. The insiders and people invested in me before have funded the company. So we funded all the studies all the way through. I mean, again, the purpose of a mine, if you've been in the mining industry, is to get the production. That's the purpose. There's no use doing anything else. So we believe Longstreet has enough ore to be a mine, a starter mine at least, make a lot of money, get the production quickly. So that's what we're focused on.
And so who owns most of the shares? And what percentage does management own? And has management ever sold?
Yeah, no, so look at the filings. We've never sold. And if you look at the filings, the only thing we've filed over the last 6 years, I don't think we filed any promotional stuff. We just filed every time we put money in an 8K. So we own the majority of the company, over 50%, and never sold. And I think I think as an investor, and I invest in a lot of different companies, I think it's good to have, if you're going to invest in a company, what's really important is the management directors also invested in the company, because a lot of companies have managers just making salaries and don't put money in. Well, if they believe in it, you believe in the project, you should invest, and we invest.
And so talk a little bit about the space. How is it possible to have gold on top of a hill from a caldera structure without it being more fully expressed at depth?
Well, we believe the ore body, like Round Mountain, goes to depth, right? With some of the deeper drill holes. So we do have some holes below the pit that show mineralization, but we haven't done a lot of that. So if you look at how we're going to mine this, once you take the top piece off of main, you're still drilling from within. So we believe the structure is at depth, and usually the caldera feeders are between 1/3 to a mile below the ore on surface. So it could be a massive depth. We don't know that, but we believe it's there.
And so does the geology have a parallel in the vicinity?
Yes, we've identified one. If you, I think I'm going to put a video. We have a video of our ore body on the website. If you guys go, and in the video, it's hard to see it, but we see 2 separate feeder things coming down the hill. So what we think is going on is even that little top of that hill has the ore on it. Below that, there's 2 basic structures that are feeding up to that. So it's pretty interesting. So again, we believe that we haven't spent the money or drilled a lot deeper. We've done some deep holes, but we believe it goes to depth.
And how deep are they? Are the feeders?
Well, again, looking at what Clubs Caldera and a gold structure like a Round Mountain would have, or other countries around the world will have, they could be between a third to 1 mile below the ore on surface. So pretty deep.
So talk a little bit about the accessibility of the property.
Yeah, so it's pretty easy. So it's basically highway. I think it's Highway 15 that goes from Vegas up to Tonopah. You come down another highway from Tonopah, then it's basically a few miles up a BLM, basic gravel road, all accessible. And then from that turn off, we're a mile and a half up. So it's really accessible to basically get moving things in and out and that kind of stuff. So it's not up in the middle of the hill somewhere that you can't get to. You got to build a massive road. Here, the only road you have to basically build is a little expansion on our mile and a half road, and then some roads to get down from the top of Main. So it's not very much of road cost.
And so when you talk about putting at least some of your gold into your own product, assuming coins, what does that do to your profit margins?
Well, it's interesting. And no one's done this before but Tom Power being, we've been business partners for a long time and other things, and close friend, and we talked about this a lot. I'm the largest. He's the second largest shareholder. We think that it's possible that, because everybody just think about it. If you're a normal junior mining company, you would basically produce out of the leach pad and you probably just sell it from there, or you could produce some bars possibly. We think that we could obviously do some of that, but we believe that by putting it into a coin, the margins jump drastically. So think about it. People are buying a $50 silver coin that has $12 of silver in it, right? So I think you can understand the margin. We think it's an incredible thing to do. It's not going to be all our goals unless things really take off, but we think it's another avenue that no other company's doing to create more wealth for the shareholders.
Well, really interesting presentation today, Lindsay. Thank you. We hope that you come back on in the future with some more of these updates. And thank you so much for joining us today.
Welcome, man. I'm very happy to do this, and thank you for having me. I appreciate it. I hope everybody enjoyed that, and reach out to me if you have any questions.
Absolutely. All right. Thank you.
Thank you.
Everyone, we'll be right back.